If you are inconsistent with time frames, this movie will help you. I'll show you today exactly why I only use the 15 and the 4 hour. After this video, you'll know why 15 minutes is enough for intraday trading, what I mark for the days, and what I don't use, so that you can have a clear decision. Why changing time frames ain't good for the mindset, and why it keeps you from being a profitable trader. Changing your analysis every minute is what happens if you go from the 15 minutes to the 5 to the 1. It's not accurate. You only actually need about 2 or 3 time frames. The most ones that I use is the 4 hour and the 15 minutes. For me, the 15 minutes says one thing. It shows me the structure overall and the movement of the market intraday. The 4 hour I use for higher highs and higher lows and to actually know what the liquidity is that the market is drawn to. If you go from the 15 minutes, says one thing, the 5 minutes says something other, and 1 minute that creates a not good mindset. If you keep looking until you see what you want, you will find it. You will find an entry. But that entry isn't structured. That entry is full of emotions. And your brain will trick you into seeing a setup that isn't the right one. So be patient, and I'll explain exactly how we can use only the 15 minutes for those entries. One time frame for an entry, one story. My story comes from the 4 hour chart and the 15-minute chart. The 15 I use for direction and for entries. The 4 hour I actually just use for structure so that I know what the main structure is and I see the 15-minute move into it. The structure is visible after we see a break of structure or a change in character. Then we have a clear moment of how the market is moving without having to zoom in or out, and we can cancel everything else. The second thing is why I use it is you have time to prepare for that entry. The 15 minutes gives you time to take your plan and act on it. So you don't go in a reaction of emotion, you go in action of control. It filters all the trades that are not needed to take. Less signals, have higher quality trades that you take, and better decisions. That's how a profitable trader keeps working. What lower time frames actually do to you and your brain? On a 1 minute and a 5 minute, every wick looks like a reversal. So it tricks you into taking very small moves and very small setups without even knowing what structure is. And if you don't know what structure is, you're just gambling, and I don't want to see that. I want to see nice process traders. I want to create a bunch of traders that actually know what they're doing. So watch all these episodes. It will help you be the profitable trader that you want to be. Instead of using the 1 and the 5 minute, you should actually start using the 15 and the 4 hours. The reason why is it gives you a clean structure movement upwards. And out of that structure, we will take a fair value gap as an entry. This way, you will not take 100 trades a day. This way, you will only take 2 or quality setups. You will not chase the market anymore. You will be patient until the market comes back to you. And this is how we keep our profits instead of giving more profits to the market than we actually want to. So what do I actually mark on the day chart? I mark most important levels, first of all. The first levels are previous day high or previous day low. If it's the beginning of the week, we use previous week high and previous week low. And we also set up sessions highs and lows. Especially if we're trading in London, we set up Asia high and Asia low because that session is just before London. Reason why is those are major liquidity pools and the market is drawn to liquidity. I'll explain another movie where those liquidities are actually pointed at. Step 2. Mark at least a swing point. That last clean swing high and swing low that actually matters. I mean with this, where did the market start showing structure in a direction? And then step 3, wait for structure. So be patient until that break of structure comes or a change in character comes after that swing high point. If you don't get a clear structure, do not do anything. Just be patient. The market will show you exactly what it wants you to see. If you do not see the move in a bigger time frame that aligns with your smaller time frame, the 15 minute, do not trade. It's no point of it. Stay out of the market until the market shows you exactly what you want to see. This will prevent you hugely from taking unnecessary trades. Only take the ones that you actually know that will be good for yourself. Let's go over to the chart right now and take a look at a 15 minutes. I did not prepare anything, so let's go into it and I'll show you immediately what I see. We'll even go to the day of today. And I'll go for a 4-hour to a 15 minutes and I will mark out of everything right now so that you actually can see what I see and know what I mean by the movements. So let's start with a 4-hour. This is our chart. This is actually this week, so we can see what happens. So we start with setting out what we need to set out. So that's previous week high, previous low. So we just taken out previous week low. You can mark them just like this. Previous week high and previous week low. Now we go to the day chart. We're going to set out previous day high and previous day low. Those are a must to set out every day. If it's not the beginning of the week, you don't need to. But just set them out. These are major liquidity pools. So we had a huge opening today. The 4-hour. This is your main structure. That means that we are trading off of the 4-hour to see what the liquidity is so that we can actually spot where the right ones are. Now, if anybody could see it already, we've been chopping here. We've been going sideways. There's not much of structure. There ain't much highs or lows that we created. We are just going for from 19 December until now, we've been actually going sideways. We didn't make new highs or lows. So first of all, know what kind of market you are into. So opening gaps are liquidity pools. This is a liquidity pool under here. We'll probably go to these for value gaps today. Now, first of all, what am I looking for in a 15 minutes? We set out most of them. Now go to the 15 minutes. The 15 minutes, we want to see structure. So Thursday, we had huge candles coming lower. This is meaning that we had a break of structure. First of all, we had a change in character. We have a break of structure. And we have a nice continuation in a direction. We are not trading the move down here. We are patient until the move comes back up. Then this is our trade. How do we set it up? We just take a FIB tool. I'll explain this all in another movie too in detail how exactly to do this. We take our FIB tool. We are patient until the market comes back to fair value of price, that 50 level, or even that 62. That's our entry. We have a fair value gap right here, a 15 minutes even. This can be your entry that you take. This fair value gap right here is above fair value of price. We had a structure. We don't trade those small moves, guys. We are patient until we see a huge move where there is a lot of force into it. We have patience until the market comes back. We put our stop at the previous swing high. So this is that swing high that we need. Clear swing high. A swing high is a high and two candles are lower. This is a swing low. The two candles previous to it are higher actually. So that comes in. This is that entry, and we target this low. The reason why is this is the point that the markets started returning into fair value of price, and if the market continues in the same direction, that's your target. Nothing else. We don't see anything else except this. And that will be first EP and probably also last one. If you're lucky and we see other liquidity pools like here, you could have targeted the next swing high or low. And that's how you target and enter. Clean structure movement, clean reaction into fair value gap, clean price action to where we have to take it. So one time frame gives you a clear story and gives you one story. One story makes you calm in your trading. It gives you a clarity in your trading. It gives you clarity in your mindset. So keep it to those two time frames and you will be more consistent in trading. In the next episode, I'll explain why we use a 15-minute fair value gap, and I also will explain what tools that we use for entries.